Hello, Maverick Traders. This is Rob Reinhold. Good morning, good afternoon, good evening to our traders in Asia. But we are about 12 minutes away from the US Payroll Report on April 7th. Oh, by the way, happy Good Friday, everyone. And if I don't touch you over the weekend, happy Easter. Let's jump into what we're getting here. We are, like I said, just 10 minutes away from the US Jobs Report in April. And this one's a good one because the stock market is closed due to the Good Friday holiday, which means that if people want to play this report, they have to play it in some of the other markets, FX being one of them. So I think this is going to be a really, really good report. However, with that being said, remember, everyone is here for this report and then everyone wants to go on vacation. Understand, we're likely to get a huge pop off of the news, and then there's probably likely to be a little follow through, but not a lot. So let's go through all the ways that you can trade news. You can enter before the event, you can enter on the event, or you can enter after the event. Most of the time, I'm entering on the news or a second stage entry. Most of the time. However, this is a moment where I think that if you're going to play this report, you have to get in before the news. So let's talk about all the risks of getting in before the news. First thing we need to talk about is slippage. Getting in before news is very easy. The market is orderly, the market is calm, you can place your order, everything gets triggered, everything is perfect. Okay, after that, then all of a sudden, we have to worry about slippage on our exit orders. Any stop orders we put in, understand this market is going to be moving very quickly. And the orders we put in are likely to experience some slippage, meaning they don't get filled where they were supposed to get filled. So again, if you were to put a stop in at 183.10 on a short, this thing is going to blow higher, and you may not get triggered until much higher. There could be a whipsaw here. So this is what we do here at Maverick when we trade news, is we like to break things up into stages or legging in. This is very possible to happen today, this whipsaw price action. So if we enter in a full position, if we go long on something and then put a stop order, we're very likely to get triggered. If we go short on something and put in a stop order, we're likely to get triggered. So how do you manage this whipsaw price action that happens right on the news announcement is what we're going to do today. I'm going to be taking a 1/3 position. So I know my position size I want to take. I'm going to take the first third before the announcement. I'm going to take the next third basically on the announcement, and then I'm going to take my last third after the announcement, and I'm going to be adjusting my stop after that. So this is one of the rare times I enter before. Entering before is the greatest risk-reward trade out there. It's going to be a big win or a big loss. But, like I say, we can mitigate this by entering into smaller positions. So let's take a look at where we are. I'm going to start off with our currency baskets. Obviously, we want to focus on the dollar, and I really like the dollar chart here. So over the past week, the dollar has actually had a nice little rise. So if we take a look at what the dollar has done off the bottom here, we've got a nice little run here. I really like dollar anytime it rallies to be short. If you take a look at this over the last month or two, we can see that any little rallies we see up to this upper trend line have been really good short opportunities. I do like the dollar here. I do like that we're not on the bottom. We've had this little rally. So the question is, what are we going to play it against? Let's go down the line here. We've got yen. Yen looks good. So again, I want to be short dollar. So I think dollar yen. I think this looks really good. Yen here is saying, hey, I most likely wanted to go up. I've got this nice run. I got this very, very small pullback. Yen is definitely on the list. Euro has been my favorite over the last couple weeks, but I got to say, it's not really doing anything at the moment. So let's go down to Swiss franc, and boy, Swiss franc even looks better than yen. So when I take a look through these things, I ranked yen looked good, but Swiss franc looks even better. Let's go through the rest of the list. Pound looks okay, but not stellar. CAD looks terrible. So again, we don't want to be buying things that look terrible. CAD looks terrible. Aussie looks terrible. And the Kiwi looks terrible. So to me, this is a pretty easy call here. It looks like either dollar Swiss franc or dollar yen looks to be the trade here going into this. Again, this is if you want to be short dollar. If you want it to be long dollar, then you'd want to choose one of the weaker currencies, like the Aussie, the Kiwi would probably be the best. So this is what I'm looking for. I'm looking for a short here on dollar Swiss franc. I'm going to be getting into a third of a position before the announcement. I'm going to be ready to take another third. Now remember, what I expect to happen is maybe some whipsaw price action, some crazy price action. So I'm going to get short with a third position. If it runs up, I'm going to take another third of a position short if it runs up on a whipsaw to maybe get a little bit better average price. And then I'll wait for my third one until we get a clear breakdown of this low base. So let's say 90.20. 90.20 is going to be my third entry. So first entry is just going to be here at the market. Second entry, I want to try to get in off of a whipsaw higher. Whipsaw higher, I want to grab some more. And then if it does move lower like we think, I'm going to grab the last bit at 90.20. So let's go ahead and get this started. Again, I'm doing this in legs. I do not think that it makes any sense at all to enter a full position going into a news event like this, because I think you are just flushing money down the toilet. I think you are just asking the market to take your money with your stops. So I'm going to put in my order here. And again, I'm just going to put in a market order. I'm going to attach my stop. Now, I usually do about 1/3% off of my stops around news events. However, this is a third position, so I'm going to go like a full percent. So that is going to be 91 cents. So 91 cents from the current market is going to be right around 91.40-ish. Okay, 91.40-ish. Right, so this is my oh great. Decided to mess up my order. All right. I'll just go ahead and start this over. All right, so my entry is right there about 90.50. I'm going to put in my buy stop here. All right, so here I am. I like to get my next order ready. So I'm going to just get my next order ready here. I'm going to be using a I'll get it ready as a stop. That's fine. I'll get my order ready down here at 90.22, and I can always adjust this. So I've got my next order ready here to go, and I can adjust this up or down however I need to. But again, I want to let this whipsaw price action potentially go. So I've got 1/3 of a position with a basically a 91 pip stop, which is a full 1% away. Very unlikely to get hit on whipsaw price action. If it pops up, I'm going to go ahead and grab some more, quickly adjust my stop, both position size and my stop price to reflect the amounts that I wanted to risk. And then if we do break down below 90.20, I'm going to take either that third position, or it even could be a second position based on the price action we see. All right, we are very close to this report. We'll wait and see what we get. And I really love to not even check the news. I'm going to check the news just so we have something to talk about, and we'll talk about the numbers. But most times I don't even like to look at the news. I used to turn my TVs off before the news because I didn't want to see the number and then have a thought of what I thought it meant. I wanted to trade pure price action. Absolutely pure price action on this. All right, so again, we are getting this initial move higher. So it looks like dollar is strengthening a bit. Again, we expected to see. We said, hey, we don't know which way this is going to go, so we're going to play this in a manner that is overall short dollar, but we can get into a decent price. We haven't really moved much here. I mean, this is a 20, 30 pip move higher. The big question is, where do you enter this second position? I really kind of wanted to see this pop up over this 90.75. That to me was going to be where I wanted to jump in and grab my second position, but you can see the dollar is already weakening quite a bit here off of the initial pop that it had higher. I'm going to let this go here for another minute or two before I enter into my second position. You can see here it is not really doing much. My guess is the report came in right around expectations, which is why we're not seeing that big of a deal. All right, let's go check some news. Just to have something good to talk about. All right, the jobs report was slightly better than expected. 236,000 jobs, and the unemployment rate went down. Okay, so this is a report that if I was, again, writing an essay, I would say that this is mildly bullish dollar. That's, again, what I would have to say if I was writing an essay on what this jobs report means. And again, this is just purely off of economics. This isn't price action. This isn't expectations. This isn't anything. This is just, if I was in an economics class and I had to write out what this jobs report meant, I would say that it was mildly bullish dollar. Okay. But here's the great thing, as you can see, is that the dollar isn't really moving anywhere. So it's telling us that this news isn't going to spike the dollar. It's not super bullish for the dollar. It doesn't catch people off guard. It's not surprising anyone. It's basically a little bit stronger than expected. So here we are. We've got a third of a position. I've got to say that this is where you have to take a look at the situation and think, okay, is this the kind of report? Is this the kind of price action that I want to leg in, take a second position and a third position? And the answer is no. Here I am. I'm on a Good Friday. Got the report. When we started this, I said, I think you've got one shot at this because I think all the movement's going to happen up front and then it's going to fade for the rest of the day. I frankly don't want to take my second and third legs at this point. To me, the trade is just not there. It just doesn't have the momentum. The last thing I want to do is spending all day long here legging in and trying to fight this trade when I know pretty early on it is just not going to make it. So, in this situation, the great thing is I don't have to do anything. I don't have to take my second and third legs. That being said, I also don't want to react. I don't want to react to the situation because, look, I already have a position on the line. I've got money on the line. And whenever money's on the line, it has to be done in a very rational, reasonable way. And just getting out here is not rational and reasonable. It just isn't. So we have to treat this as a real trade that we're looking to try to make some money on. But again, it's going to be a third of a position. So I'm going to go ahead and cancel out my second leg. And I'm just going to adjust my stop down. I'm just going to adjust my stop down to a regular stop order, which again, for me, would have been right above this resistance here. So I'm going to bring my stop down to 90.77. That's where my stop is, 90.77. So if I do get knocked out, I will take a loss, but it will be on a 1/3 position. 1/3 position will be a much smaller loss than normal, and then I will wrap it up and be gone for the day. If this thing does turn back down, then I'm going to simply follow this thing with a 13-period EMA. I'm going to use that 13-period EMA. It's likely going to be the fastest indicator for a trailing stop. My 13 EMA line here. So if it goes down, back down below this, and we start to see some dropping, I'm just going to follow that 13 EMA down with a trailing stop. And then I'm going to be out of this trade over the weekend. On a third of position, I just got a position, would you hold this trade over the weekend if it started going your way? A third of a position probably would. I probably wouldn't mind doing this if it looked good at the end of the day, meaning the price action was going our way, we had a profit, things were looking better than they are at the moment. But most likely just close it out, have a good weekend, and then we'll come back hunting next week. Well, that kind of wraps up for me. I'm fully expecting here to get stopped out on a third position. If by some reason it does reverse and turn back down, that's great. But look, it's a third position, so it's not going to make me any big money either. So at this point, I'm more concerned about my weekend. So hopefully that helped, and we'll see what happens on this trade. But everyone, if I don't talk to you, have a great Easter. Have a great Good Friday. Have a great Passover. Goodbye, everybody.